ExamPrep.School. Virginia Property and Casualty Insurance Exam. Exam code SERIES 11-3. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Auto insurance, national policy forms and coverage. Auto insurance, Virginia laws and requirements. Business owner's policy. Commercial package policy. Dwelling policy. General insurance. Homeowner's policy. Insurance regulation. Other coverages and options. National. Property and casualty insurance basics. VA programs and markets. Workers' compensation, Virginia. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In insurance terminology, risk, peril, and hazard are distinct concepts. Which of the following best describes the relationship among these terms? A. Hazard increases the likelihood of loss, peril is the cause of loss, and risk is the uncertainty of loss. B. Hazard is the uncertainty of loss, peril increases the likelihood of loss, and risk is the cause of loss. C. Risk increases the likelihood of loss, hazard is the cause of loss, and peril is the uncertainty of loss. D. Risk is the cause of loss, hazard is the uncertainty of loss, and peril increases the likelihood of loss. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. This option is correct because risk refers to uncertainty of loss, peril is the direct cause of the loss event, and hazard is any condition that increases the probability of that loss occurring. Reason B is not correct. This description misassigns the definitions of hazard and peril, confusing their distinct roles. Reason C is not correct. This option swaps the meanings of risk and hazard, making both definitions incorrect. Reason D is not correct. This choice confuses all 3 terms by mislabeling risk, hazard, and peril. Question 2. Which of the following statements correctly distinguishes pure risk from speculative risk? A. Pure risk involves only potential for loss or no loss, while speculative risk entails chance of gain or loss. B. Speculative risk is insurable due to its predictability, whereas pure risk is typically uninsurable. C. Pure risk offers a possibility of gain and loss, while speculative risk involves only potential for loss or no loss. D. Speculative risk arises from negligence, while pure risk arises from intentional acts. The correct answer is A. This option is correct because pure risk can result only in loss or no loss, whereas speculative risk presents opportunities for gain as well as loss. Reason B is not correct. Insurability is not determined solely by predictability. Pure risks are generally insurable and speculative risks are not. Reason C is not correct. This reverses the definitions, describing speculative risk as pure and vice versa. Reason D is not correct. This incorrectly ties risk types to causes rather than outcomes of the event. Question 3. Which scenario best exemplifies the application of the law of large numbers in insurance? A. An insurer issuing 100 homeowners policies instead of 10 to better estimate claim frequency. B. A policyholder increasing a deductible to reduce moral hazard. C. A company diversifying product lines to mitigate systematic risk effects. D. An underwriter rejecting applicants based on adverse selection concerns. The correct answer is A. This option is correct because issuing a larger number of similar policies reduces variance and improves the accuracy of loss predictions under the law of large numbers. Reason B is not correct. Changing a deductible relates to moral hazard and cost sharing, not the law of large numbers. Reason C is not correct. Diversifying across lines addresses systematic risk, not frequency estimation under this law. Reason D is not correct. Rejecting applicants addresses adverse selection, not statistical predictability through large samples. Question 4. Which practice is primarily intended to reduce adverse selection in an insurance pool? A. Incorporating a coinsurance clause for high-value properties. B. Imposing strict policy cancellation provisions for non-payment. C. Offering a blanket additional insured endorsement to all policyholders. D. Classifying applicants by risk characteristics and adjusting premium rates accordingly. The correct answer is D. This option is correct because underwriting classification and rate adjustments based on risk characteristics align premiums with expected losses, mitigating adverse selection. Reason A is not correct. A coinsurance clause manages moral hazard and underinsurance, not adverse selection. Reason B is not correct. Cancellation provisions ensure payment compliance but do not prevent high-risk applicants from joining the pool. Reason C is not correct. A blanket additional insured endorsement expands coverage options but does not address selection bias. Question 5. A chemical manufacturer evaluated the risks of launching a product line involving corrosive substances. Although it considered installing containment systems and purchasing pollution liability insurance, it ultimately abandons the product line entirely. Which risk management technique is exemplified by this decision? A. Installing internal controls to minimize the likelihood of loss. B. Shifting potential losses to an insurer through a policy. C. Eliminating the activity to completely remove exposure to loss. D. Accepting and budgeting for any remaining potential losses. The correct answer is C. This option is correct because abandoning the product line entirely removes exposure to the risk, rather than reducing, transferring, or retaining it. Reason A is not correct. This describes reducing risk through controls rather than removing the hazard entirely. Reason B is not correct. This describes transferring risk to an insurer rather than avoiding the risk. Audit. Question 6. Which of the following statements best describes a non-admitted insurer compared to an admitted insurer? A. It holds a certificate of authority in the insured state. B. It must file policy forms and rates with the state's insurance department. C. It is not licensed in the insured state and not protected by that state's guarantee fund. D. It is subject to the state's solvency and financial regulation. The correct answer is C. The correct answer identifies that non-admitted insurers lack a certificate of authority, are unauthorized in the state, and are not covered by its guarantee fund. Reason A is not correct. Holding a certificate of authority describes an admitted insurer, not a non-admitted one. Reason B is not correct. Filing policy forms and rates is a duty of admitted insurers under state regulation. Reason D is not correct. Subjecting to state solvency regulation applies to admitted, not non-admitted insurers. Question 7. Which of the following correctly matches insurer types with their jurisdiction of incorporation? A. Domestic, incorporated outside the United States. Foreign, incorporated in another U.S. state. Alien, incorporated in the state of operation. B. Domestic, incorporated in the state of operation. Foreign, incorporated outside the United States. Alien, incorporated under federal insurance law. C. Domestic, incorporated in the state of operation. Foreign, incorporated in another U.S. state. Alien, incorporated outside the United States. D. Domestic, incorporated under federal insurance law. Foreign, incorporated in the state of operation. Alien, incorporated in another U.S. state. The correct answer is C. The correct answer aligns domestic insurers with their state of operation, foreign insurers with other U.S. states, and alien insurers with incorporation outside the United States. Reason A is not correct. The mapping of domestic and alien jurisdictions is incorrect for that choice. Reason B is not correct. That choice misattributes the alien insurer definition and falsely applies federal law. Reason D is not correct. This choice incorrectly defines domestic and alien insurers relative to U.S. jurisdictions. Question 8. Which of the following best describes the ownership structure of a mutual insurance company? A. It is owned by shareholders and typically issues non-participating policies. B. It is owned by policyholders who may share in earnings through dividends. C. It is operated as a state-owned enterprise providing public insurance. D. It is funded by private investors but regulated as a non-profit entity. The correct answer is B. A mutual insurer is owned by its policyholders, who may receive dividends from company surplus in participating policies. Reason A is not correct. Owners are policyholders, not external shareholders in mutual companies. Reason C is not correct. Mutual insurers are not state-owned enterprises. They are private policyholder-owned. Reason D is not correct. Mutual insurers are not funded by private investors as nonprofits. They are policyholder-owned. Question 9. Heritage Reciprocal Exchange, formed by 100 property owners as subscribers, appoints Hillside Agency as its attorney-in-fact to administer policies, collect premiums, and pay claims. After a catastrophic hailstorm depletes the loss fund, additional funds are needed to cover outstanding claims. Which of the following best describes the subscriber's financial obligations? A. Subscribers are only liable up to the amount of their initial premiums and cannot be assessed further. B. Subscribers may be assessed additional contributions beyond their premiums to cover claim shortfalls. C. The attorney-in-fact must use its own capital to cover any deficit in claim payments. D. Uncovered claims automatically revert to the state's Insurance Guarantee Association. The correct answer is B. The correct answer is that subscribers may be assessed additional contributions beyond premiums to cover deficits, since each subscriber has potential assessment liability under a reciprocal exchange agreement. Reason A is not correct. This is incorrect because subscribers in a reciprocal exchange can be assessed additional amounts beyond their premiums when losses exceed reserves. Reason C is not correct. This is incorrect because the attorney-in-fact acts as manager and does not assume financial risk for claim payments. Reason D is not correct. This is incorrect because reciprocal exchange claims are obligations of subscribers, not obligations of a state guarantee fund. Question 10. Which of the following is an essential element of a valid insurance contract that must exist at inception, but is generally not required in non-insurance contracts? A. Insurable interest. B. Offer and acceptance. C. Payment of premiums. D. Legal purpose. The correct answer is A. The correct answer is insurable interest because it ensures that the insured has a financial stake in the loss of the insured item, a requirement unique to insurance agreements. Reason B is not correct. Offer and acceptance are fundamental to all contracts, not unique to insurance. Reason C is not correct. Payment of premiums is the consideration provided by the insured but is a common contract requirement. Reason D is not correct. Legal purpose is required for any enforceable contract and is not specific to insurance policies. Question 11. Which statement best defines the aleatory characteristic of an insurance contract? A. The insurer must perform its obligations regardless of a loss. B. Only one party's promise is legally enforceable. C. The value exchanged by the parties may be unequal and depends on a contingent event. D. The insured must share equally in the loss with the insurer. The correct answer is C. The correct answer is that the value exchanged may be unequal and depends on a contingent event because aleatory contracts involve uncertain exchanges of value based on future occurrences. Reason A is not correct. Requiring performance regardless of loss conflicts with the contingent nature of aleatory obligations. Reason B is not correct. Describing only one party's enforceable promise refers to a unilateral contract, not the aleatory feature. Reason D is not correct. Shared loss refers to contribution or coinsurance, not the aleatory characteristic. Question 12. Which principle holds that ambiguous policy terms should be interpreted in favor of the insured because the insurer drafted the contract? A. Contra proferentem. B. Utmost good faith. C. Indemnity. D. Subrogation. The correct answer is A. The correct answer is the doctrine of contra proferentem because it requires that any ambiguity in a contract be construed against the party that drafted it, which is the insurer. Reason B is not correct. Utmost good faith involves the duty to disclose material facts, not interpretation of ambiguous language. Reason C is not correct. Indemnity is the principle of restoring the insured to the pre-loss position, not about contract interpretation. Reason D is not correct. Subrogation allows the insurer to recover from a third party, not address contractual ambiguity. Question 13. John completed a homeowner's insurance application asking about prior water damage to the property. He answered no, although he had previously repaired significant flood damage. Under the doctrine of utmost good faith in representations, which action can the insurer most appropriately take? A. Cover a subsequent water damage claim because the misstatement relates only to past damage. B. Void the policy and return any unearned premium to the insured. C. Apply a percentage reduction to any water damage claim payment. D. Increase the deductible for future water damage claims. The correct answer is B. Under the principle of utmost good faith, a material misrepresentation on the application allows the insurer to rescind the contract and return unearned premium. The insurer must show that the misstatement was material and that it relied upon the representation when issuing the policy. Reason A is not correct. A past damage misstatement still constitutes a material misrepresentation, so the insurer is not required to cover a related claim. Reason C is not correct. Insurers cannot simply reduce claim payments for a material misrepresentation. They may only rescind or enforce the full contract. Once every 10 years. Question 14. Which of the following is not typically found on an insurance policy's declarations page? A. Policy period including effective and expiration dates. B. Named insured's mailing address. C. List of endorsements applicable to the policy. D. Detailed description of covered perils and exclusions. The correct answer is D. The declarations page summarizes coverage elements such as policy period, named insured, and listed endorsements. Detailed covered perils and exclusions appear in the insuring agreement and exclusions sections, not on the declarations page. Reason A is not correct. The policy period is a core component of the declarations page and must be shown. Reason B is not correct. The named insured's address appears on the declarations page for identification and mailing purposes. Reason C is not correct. Endorsements in effect are listed on the declarations page to show additional coverages or modifications. Question 15. In a standard property insurance policy, the insuring agreement primarily obligates the insurer to which of the following? A. Provide a legal defense for liability lawsuits. B. Pay for direct physical loss to covered property. C. Warrant that the insured property is free from defects. D. Guarantee implementation of safety loss prevention measures. The correct answer is B. The insuring agreement sets forth the insurer's promise to indemnify or pay for direct physical loss or damage to property covered under the policy. Liability defense and warranties are separate provisions. Reason A is not correct. Legal defense obligations are found in liability policies under a duty to defend clause, not in a property insuring agreement. Reason C is not correct. Policies do not warrant defect-free property. They indemnify against covered losses instead of guaranteeing condition. Reason D is not correct. Loss prevention measures may be recommended but are not guaranteed by the insuring agreement. Question 16. Under a standard commercial general liability CGL policy, the term occurrence as defined in the definitions section refers to which of the following? A. An intentional act resulting in bodily injury. B. An accident including continuous or repeated exposure to harmful conditions. C. Property damage arising solely from contractual liability. D. Any event regardless of whether it causes loss or damage. The correct answer is B. The CGL definitions section defines occurrence as an accident, which may include continuous or repeated exposure to conditions that unexpectedly cause injury or damage. Intentional acts and contractual liabilities are excluded. Reason A is not correct. Intentional acts are specifically excluded from the definition of occurrence. Reason C is not correct. Contractual liability is treated separately and not part of the occurrence definition. Reason D is not correct. Not every event qualifies. It must be accidental or unintentional to be an occurrence. Question 17. Which of the following is not one of the insured's duties after a covered loss as stated in the conditions section of a property policy? A. Provide sworn proof of loss within the time required. B. Notify the insurer promptly of how, when, and where the loss occurred. C. Submit to examination under oath if requested. D. Abandon the damaged property to the insurer. The correct answer is D. The conditions section requires proof of loss, prompt notice, and examination under oath when requested. It does not require the insured to abandon the damaged property to the insurer. Reason A is not correct. Proof of loss within a specified period is a standard post-loss duty in the conditions section. Reason B is not correct. Prompt notification of the loss circumstances is required by the conditions section. Reason C is not correct. Submitting to an examination under oath is a common conditions clause duty. Question 18. Which of the following best describes a non-renewal as opposed to a cancellation under standard property insurance provisions? A. Insurer terminates the policy midterm for non-payment of premium. B. Policy is voided midterm due to material misrepresentation. C. Insured voluntarily surrenders the policy before its expiration. D. Policy period ends on its expiration date without issuance of a new policy. The correct answer is D. Non-renewal refers to the insurer's decision not to renew the policy at its expiration date, whereas cancellation involves termination before expiration, often for reasons like non-payment or misrepresentation. Reason A is not correct. Midterm termination for non-payment is a cancellation rather than non-renewal. Reason B is not correct. Voiding for misrepresentation is a form of cancellation, not non-renewal. Reason C is not correct. Voluntary surrender is cancellation by the insured, not non-renewal. Question 19. An insured operates facilities in Virginia and Ontario under a liability policy defining covered territory as the United States, its territories and possessions, Canada, and Puerto Rico. A claim arises from operations at the Ontario facility on September 10th, but the policy period expired August 31st. Which statement describes the insurer's obligation? A. Deny the claim because Canada is not included in the territory definition. B. Deny the claim because the loss occurred after policy expiration despite being within the territory. C. Pay the claim because territorial coverage overrides the policy period requirement. D. Pay the claim under an implied extended reporting period for occurrence policies. The correct answer is B. The correct answer is that coverage is denied because the loss occurred after policy expiration, even though it was within the defined territory. Policy period must be in effect at the time of loss in order for coverage to apply. Reason A is not correct. The territory clause does include Canada, so the loss location does not exclude coverage, but the policy period does. Reason C is not correct. The policy period expiration precludes coverage, so it cannot be covered even though territory matches. Reason D is not correct. There is no automatic extended reporting period for occurrence-based policies unless specifically endorsed. Question 20. A commercial property policy effective. April 1st to March 31st contains a liberalization clause stating that any broadened coverage issued during the policy period applies immediately without additional premium. On October 1st, the insurer promulgates a new form expanding coverage for water backup without charging extra. On December 1st, the insured experiences a loss due to water backup. Which describes how the liberalization clause applies? A. Broadened coverage applies only to policies issued after October 1st. B. Broadened water backup coverage automatically applies to this policy for losses after promulgation without extra premium. C. Broadened coverage applies retroactively to all losses since policy inception. D. Broadened coverage applies only if the insured requests and pays an endorsement premium. The correct answer is B. The liberalization clause allows any broadening of coverage issued during the policy period to apply immediately to the existing policy at no additional premium. So the new water backup coverage applies for losses after October 1st. Reason A is not correct. The clause applies to the existing policy rather than only to new policies issued after the revision date. Reason C is not correct. Coverage does not extend retroactively to losses before the form's effective date under the liberalization clause. Reason D is not correct. No additional premium or endorsement request is required for broadening issued during the policy period. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.